Most people don't lose money in the stock market because they are stupid. They lose money because they are impatient. That idea comes from Charlie Munger, one of the most disciplined financial minds in history. And if you're trading without patience, you're not really trading. You're gambling. In this video, we're going to break down Charlie Munger's core ideas, why most traders fail even when they're intelligent, and how these principles still apply in today's fast, emotional markets. If you've ever overtraded, chased hype, or felt stress watching charts move, this is for you. Charlie Munger was the vice chairman of Berkshire Hathaway and the lifelong partner of Warren Buffett. He wasn't a day trader. He didn't use indicators. He didn't predict short-term market moves. Yet his thinking helped build one of the most successful investment records in history. What made Munger different wasn't genius. It was discipline. He believed success in markets has far more to do with avoiding obvious mistakes than with making brilliant predictions. One of his most famous ideas was simple. Invert. Always invert. Instead of asking, "How do I make money?" Munger asked, "How do people lose money?" When you ask that question, the answers become clear. People overtrade. They ignore risk. They chase stories instead of facts. They follow crowds. They refuse to admit when they're wrong. Munger focused on avoiding these behaviors first. He believed avoiding stupidity is more powerful than seeking brilliance. Most traders try to be smart. Munger tried not to be foolish. Another core belief of Charlie Munger was that psychology matters more than intelligence. Markets don't move on logic. They move on emotion. Fear. Greed. Ego. Social pressure. These forces push people to buy at the top and sell at the bottom. That's why intelligent people still lose money in markets. High IQ does not protect you from bad behavior. Munger often warned about psychological traps. Confirmation bias, where people only look for information that supports what they already believe. Social proof, where people assume something must be right because everyone else is doing it. In markets, following the crowd feels safe. But it's usually expensive. Today, those traps are even stronger. Social media amplifies herd behavior. Trading apps reward constant action. Notifications pull attention back to the market again and again. Patience is no longer just difficult. It is actively attacked. This is why Munger's ideas matter more now than ever. One of his most important beliefs was patience. He famously said that the big money is not in the buying or selling, but in the waiting. Most traders believe activity equals progress. They think trading more means learning more. In reality, overtrading quietly destroys accounts. Every trade adds emotional pressure. Every trade increases the chance of mistakes. Every trade compounds stress, fees, and bias. Waiting feels uncomfortable. But patience is powerful. Munger understood that doing nothing is often the hardest and smartest decision. This is where most traders fail. They feel bored. They feel the need to be involved. They confuse action with discipline. But markets do not reward constant activity. They reward correct behavior repeated over time. Even if you are not a long-term investor, Munger's principles still apply. Whether you trade stocks, options, or futures, risk management matters more than prediction. You do not need to be right often. You need to survive long enough for probabilities to work in your favor. Munger believed leverage is dangerous for most people. He believed complexity hides risk. He believed simplicity beats cleverness. Trade less. Risk less. Think more. You don't need more indicators. You need better decisions. Different successful traders and investors use different styles, but the core principles are the same. Control risk. Control emotion. Wait for high-quality opportunities. That is why people with very different strategies often agree on the fundamentals. The market constantly tempts you to act emotionally. Charlie Munger taught people to respond rationally. To pause instead of react. To think instead of chase. To protect capital before seeking profit. If you remember nothing else from this video, remember this. Avoid obvious mistakes. Control your psychology. Respect risk. Be patient. You do not need to predict the future to succeed in markets. You need discipline. Most people know what they should do. Very few actually do it. Charlie Munger did. And that is why his ideas still matter today. If this changed the way you think about trading or investing, stay tuned. In the next video, we'll break down how professional traders manage risk when retail traders panic.